that information, advice, or guidance that you take from this video, along with analysis and predictions of the market, is not expert advice. Thus, you use and apply it at your own risk. We are not financial experts who deem themselves authorized financial advisors. We are only sharing content based on what we know and understand of the financial markets. Should you take this information and use it, and therefore find yourself in a position whereby you lose money when trading, we are not at fault. You are not to use this information as a final conclusion of whether you should buy or sell whatever instrument we are analyzing based on this video, but as trading insights, ideas that give clues of what the market is expected to do. We also expect you to do your own due diligence of analyzing the market fully and take profitable trading decisions before you invest your hard-earned money into the market. What's up, billionaires? It's yet another week and we are back with another market analysis video. This is Sianda. I'm a trader. I live in South Africa and I've been trading for over 5 years. You know the drill, right? You know what we do every single week. We analyze the market in order to know and gauge proper signals and trends of how the market is going to be moving in the next week that we are looking at. Now, in this particular video, we as usual are going to be focused on mainly two things, right? The first being, of course, fundamental analysis, and the second one being technical analysis. Now, I will need you to stay put and definitely make sure that you stay tuned, because later in this video I'm going to be sharing a few key pointers on how to analyze the market progressively and know how to use fundamental analysis to your favor and link that with technical analysis. In addition to all of this, I'm also going to be sharing how to analyze the market technically and also share a few signals on where you can expect and see opportunities in the market. So don't move, stay right there and let's work. Now, first and foremost, guys, starting off, of course, with fundamental analysis. Now, this week is definitely not going to be a very much of a busy or volatile week in the forex market, right? We saw last week was quite a busy week. We had a bit of an up and down volatile movements when it comes to the market last week, and that is honestly based on the news, the CPI news that were released. But however, this week we don't really have a lot that we can expect to move the market in a very major way, right? The only thing that I basically know that I am looking at now, of course, whenever you are looking at the list that is in front of you right now, you are seeing a whole lot of news. But remember, when it comes to fundamental analysis, or before I even go further, right, it is crucial for you to understand that when it comes to fundamental analysis, not all news move the market. But this does not mean that the news that do not move the market are insignificant. You get what I'm saying? And that simply means that we look at all of these news, we check them out whenever they are released, we check how the market reacts. But the reason why I'm saying we don't have a lot of volatile movement based on this news is simply because there are two ways in which the market moves based on fundamentals. Either when the market releases or whenever these news are released, the market gets volatile immediately and has the ability to move a lot of points at the very same time, or it takes a direction that will affect the market in the long term based on those news. So in other words, you might find that, for example, the S&P Global Manufacturing PMI, whenever it is released, right, you might find that the market takes on the news yet directionally, not in a volatile manner. You get what I'm saying? So if it is directional, you should expect that the market should follow the pattern of those news in the next few days, weeks, or even months. You get what I'm saying? So because of this, now we look at all of the news, but when we are trading, because our situations of trading differ. Someone is scalping, someone is day trading, someone is swing trading. So how the market affects us based on our methodologies of how we trade differ. So I want you to understand this because it is a very crucial part to your trading. Now, first and foremost, like I said, we have a lot of news starting off tomorrow, which is on Tuesday, right? Then Wednesday, Thursday, and definitely on Friday. Now, for this fundamental analysis specifically, we are going to be focusing on initial jobless claims. Right now, initial jobless claims have the ability to cause the market to be immediately volatile. Right, sometimes not even in an extensive manner, but they do actually get to affect the market in one way or the other. So we are going to be looking at initial jobless claims, of which the previous was 231k. The forecast is 235, which means the forecast is simply saying there's a higher rate of unemployment compared to the previous one this week, based on the report that is coming out this week. So it is crucial for us to monitor this, and please note that I would like you to be encouraged to keep on watching these videos and making sure that you stay tuned so that you do not miss when it comes to fundamental analysis, because in the next few weeks I'm definitely going to be introducing fundamental analysis, which is going to be more detailed and not only focusing on the economic calendar. It's going to be more detailed, delving into what's happening in the particular countries of whatever instruments that we are trading, right? And even other countries, as long as they affect what we are trading, I'm going to be dwelling in on that, right? So do stay tuned and do not neglect staying on the market, or do not neglect watching these videos and keeping your eyes on this analysis with me in order to be able to know how the market is anticipated to move. To give a little bit of background on what initial jobless claims are. Right now, this is basic information that you can even find all by yourself. Some of you already know this, some of you don't, right? Now, initial jobless claims measure the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data, but the market impact varies from week to week. A higher than expected reading should be taken as negative or bearish for the USD, while a lower than expected reading should be taken as positive or bullish for the USD, right? So if there's a high number we are expecting, or that is regarded as negative, so that means the dollar is going to fall. And if there's a lower number of individuals who have filed for unemployment insurance for the first time in that past week, that simply means that the dollar is rising, because it means that there are lesser people who are unemployed. That means there are more people that are employed, which would basically mean that the US has created more jobs. Now, this is good news for the dollar, or it can be both good or bad news. However, this is basically an indicator that tells us how the US economy is performing. You get me? So now, for this particular reason, what we are going to be doing is just to be looking at this. The forecast says 235 for this coming Thursday, right? So it's already expected to be negative, which means there are more people who have filed for unemployment insurance. So based on the pairs that we are trading, especially on a pair like gold, we are expecting gold to be on the rise, right? Because of course, whenever the dollar falls, gold rises. When the dollar rises, gold falls. So that's it for fundamental analysis today. Let's head on to technical analysis. Now, looking obviously, and of course, as usual, starting with US30 on the daily chart, as we always do a top-down analysis, right? As usual, you know how I do it. I always draw my trend lines on larger time frames in order to avoid wasting time, because these are not easily changeable. They are directional for the long term, so they always tell how the market is to move. Now, as you can see, as we have always predicted or analyzed, rather, let's not say predicted but analyzed, we have established that the market is on an upward movement where we are expecting the market to come to this level. Now, I've been saying for the past few weeks that it is crucial for us to understand the fact that the market does not move the way we anticipate, even though it moves in the direction, or it may always move in the direction we've analyzed, but it has its own way, because the market is based, or it moves based on events, right? And it also moves based on the investments of different institutions and traders and governments in the world at large, right? Now, for a pair or for an instrument like US30 to move the way we anticipate all the time is definitely an error. We should not expect that. However, as far as we have established, as I said, we have established that we are in a long-term uptrend, which is actually quite near its end. Either way, it's not going to last for long, as far as I can see on this chart, right? It's crucial for us to understand this. Now, heading over to the daily chart, if I can zoom out over there, it's been a little bit of an up and down move, but overall, as we have analyzed in the past few weeks, it's definitely a move to the upside, right? Now, first and foremost, as usual, we've established that the market is moving to the upside. We have a strong support here, which was resistance, so it's resistance that has become support, right? We have another one over there internally, which was resistance that has also become support, right? And if we can look at these trend lines, remember, trend lines are the simplest way to gauge market direction, especially in the long term. Trend lines tell us what the market is doing, right? Directionally. Now, in the light of this, I need you all to understand that as much as the market is moving to the upside, these trend lines are also helping here and there to gauge, especially the turning points, the direction of the market, and the overall expected move of how the market is going to be moving, right? Now, definitely based on where the market has turned over there, we can establish a point of resistance. It seems to have hit that area at least twice. We will see that a little bit shortly when we switch to the 4-hour chart. But because we have a strong support here, this was crucial, especially when we were analyzing the direction of the market after this point, because this was a very hard level for the market to break. Hence, the market at this point is moving at new highs, right? So this is a very strong support, and we keep it here because we are anticipating that even in the future, should the market come back down, we should expect a lot of action to take place over there, right? Now, coming back or going down to the 4-hour chart, we can clearly see based on the trend lines, that of which are at this bottom level. Now, I want to also say this, as I usually say this, because I've realized that traders like to brag based on their knowledge and different kinds of methodologies of how to trade. I want you to know and to never forget this key rule, right? Never let anyone undermine your forex knowledge and skill. All that matters is the ability to make money. As long as whatever strategy or way of trading that you are applying makes you money, that is all that matters, my guy. Don't let anyone undermine you on that. Now, continuing, I see a connection here which I can draw based or using this trend line. The market has been rejecting on these particular levels for quite some time, and what this clearly tells me, from here we have 1, 2, and then we have 3. I think I can delete this trend line over here. I don't think it is important or relevant, even though it does give some direction, but it's not our focus based on where we are right now. So we can see clearly that the market throughout all of the past few weeks right, has been rejecting quite at the very same levels, and we have approximately 4 touches by far, and this one is the 5th. I guess we have 6 touches. Now that is a solid trend line over there, but of course remember the market based on market structure breaks these levels, so we are only using them as clues and confluences to confirm market direction, but they are not the solidity of how we trade. As you can see, if you were to believe that just because the market has been rejecting at these levels for all this while it's gonna reject all the more for a very long time, you may be wrong, because the more a level, especially if it's a support and resistance, which is much more of a horizontal trend line, if I can put it like that, right? In most cases the market ends up breaking such a level, hence this was a strong support level, as I have written or marked it over here, marking it as strong support. I had written strong resistance because the market kept on rejecting at the very same level. Now the more the market does that, the more it rejects at such levels. Now what we can establish from here, or what we can anticipate for this particular week, is clearly the fact that the market at this point may actually reject and come back down. I see a chart pattern over there. Although it's a valid chart pattern, the market can still reject on it and come back down. However, because these are solid trend lines that I have drawn over here, the market can come back down, still reject here, and continue to the upside. However, not forgetting or neglecting the fact that the market has been bouncing on most of these support levels for quite some time now. I can basically see more than 4 touches, even though I marked all the four of them only based on this analysis. So the market can still be expected to continue to the upside, break and continue to where we are anticipating the market or the trend to move towards, right, and complete this trend that started down here, right? So for this particular week, I'm not really expecting much except the market continuing with the trend. But of course, as usual, the market moves in zigzags, right? Because obviously as we go to the 2-hour chart or the 1-hour chart even, you can see that since it bounced up here, right, it went up, consolidated, went up again, right? Now at this point, momentum seems to be moving to the upside, but however, remember, because the market is coming from that state of resistance, temporarily it can still come back down to these low levels before it goes up until it actually does, right? And the same setup basically as the past few weeks. As you can see, the market rejected up there, and before it went all up where it is at right now, it consolidated a bit, came back down, and until it broke to the upside. So I'm not actually seeing anything new. If you know how to trade, it's going to be easy for you to know what the market is basically doing at this point. As far as I can see, based on a live trading situation of market structure, I see a change of character over there and down here, if I'm not mistaken, but it's much more clear over here on the 30-minute chart. So buying over there, going up over there, would definitely be ideal. And also it is ideal for the market to definitely reject from up there and come back down. So yeah, it's all a matter of taking your time, waiting for the market to move, give clear confirmations of what the market is going to be doing, and just move with it in that manner. However, based on where the market is at, right, directionally in terms of market analysis, my expectation is the market overall to move from here to that upper level and reject from that upper level and come back down. Right. Now, in terms of how far it can go when it comes back down, I am not certain about that. I would have to keep on watching the market and keep on looking at how the market is moving. It can come down and then bounce over here and continue to the upside, just like what gold has been doing. It's been forming new highs consistently. Or it can break and keep coming back down and change direction and keep on falling, right? But however, for now, the main focus, or what I want you to know, is the market is moving from these low levels onto the upside. And as much as it is moving to the upside, expect the market temporarily, especially US30. US30 does this a lot, right? US30 does this a very lot. You must never forget this, guys. US30 can cause you to lose money unnecessarily, right? All in the name of hunting down liquidity and all of these things. It moves down to the downside a lot before it moves to the upside. So you should anticipate it to reject here and there as you trade, and it shouldn't shock you when you see the market going down temporarily. So before you click the buy button, as much as our anticipation is the market moving to the upside until it reaches our concluded level of analysis, before you do that, be on the lookout for those spikes that go to the downside. And if you mark these support and resistance levels, you will be able to know and expect where the market is going to shoot to the downside before it goes to the upside. Another thing, check gaps, right? Be on the lookout for gaps. As you can see over here, that's a very large gap, and the market came back down to fill that gap before it continued to the upside. So if you see strong moves like that, or if you see gaps and liquidity, wait and expect the market to move down, and when it reaches those lower levels, buy and bite the call. Now, moving on to NASDAQ, right? The setup of NASDAQ is quite similar to the one of US30, but it is definitely what I have shared with you guys. Nothing gives me joy than seeing my analysis play out, especially if I've shared it with you guys, because then I am sure and I know that definitely you are getting the value that you need to get from my analysis, and you are not missing out. Now, as long as you follow up and definitely apply this throughout all of your trading week, definitely you are making money, right? Now, I want you to understand that this diagonal trend line here is a trend line that has become support in the now, right? It's a strong level of support. It's a base, in other words, as well. So because it's a strong level of support, over the past few weeks, coming especially from July, August, and now September, the market has been moving up and down, bouncing on this particular support level. Having bounced from this particular support level, the market has been moving consistently to the upside, which I definitely did say. If you were there, if you watched my analysis and you remember clearly me saying that, please hit the like button and comment, I remember, right? Because this is something that I shared with you guys over the past few weeks, and I kept on saying this is what the market was going to do, and it has been doing that. Right? Funny enough, the market did this only based on me analyzing technically before we even tap on fundamentals. This was just pure technical analysis and proper market direction analyzed and shared with you guys. So I need you to understand that this analysis that we're doing is not a joke. It definitely works, and it is crucial for you to stay tuned in so that you do not miss the analysis of the week every week, in order for you to consistently have an idea on how to make profit, right? Now, it is crucial and important to note, if I can actually place this trend line over here, that just like US30, NASDAQ is basically on the rise, right? It is on the rise, and at this point for NASDAQ, the only clarity is based on the trend lines that I have drawn here, and of course basically market structure, which is the change of direction which the market is going to show us on its own. Now, based on these trend lines, this is only a way of trying to gauge to see where the market may actually be anticipated, or where we can expect the market to actually change direction. So far, the market has been pushing to the upside really smoothly. If you bought at this particular level, oh my god, look at that. That is like over 15,000 pips, right? That's a lot of money right there. If you invested at such a level, you are definitely holding a lot of money right now. if that's also you are a swing trader. Now, looking at that, the market has been also consistent in forming a new trend line or pattern going to the upside as well, which also makes it easy for us. So which means basically on where NASDAQ is at, in fact, literally as a signal for today, I'm expecting NASDAQ to come and clear off some liquidity over here, right? And then simply reject. This is basically a signal for today, 100%, right? Throughout all of the day, I'm definitely anticipating that NASDAQ will reject over there and come back down. Now, it may not come back down here. As you can see over here, it's been bouncing, it's been moving to the upside consistently. So it can actually do that even on this particular setup. But as far as I can see, it has been rejecting over here for quite some time. So it can actually, as much as it has rejected here, it can actually come up here just to clear off liquidity, trap some traders, and then shoot straight to the downside, right? And then of course bounce from here once again and definitely move to the upside. Which, as much as I'm drawing this, it seems very simple, but on a real life chart, this can take a little bit of time, even more than a day, right? Or it can happen throughout all of the week. You might find that the market will come down here around Wednesday, but that's basically beyond 100% what I'm expecting. I'm expecting the market to fall, even if it does not have to come up here, right? But it can definitely, or I am definitely today, specifically as Monday, I'm definitely expecting the market to give a sell signal for the day, right? So now in the long term, definitely likewise with NASDAQ, of course for now we are forming new highs consistently. Expect zigzags here and there, or let me just say expect the market to also retrace once in a while, gather more momentum and keep on shooting to the upside, right? That's all we're expecting. Our anticipation is definitely to keep on buying until the market changes direction, right? So on certain days, expect sell setups and take them, but stick to the main setup, which is the direction of the market overall is to the upside, right? So even on NASDAQ, we are still buying. Now coming on to gold, gold has been definitely having a major blast of amazing moves to the upside. Ever since it broke this level, it's definitely been pushing to the upside with great consistency, right? We have this trend line over here, which functions as a strong diagonal support, and we also have this one over here. Now, since gold keeps on moving to the upside, our duty is just to follow. Like I said, with both US30 and NASDAQ, expect the market to reject at such particular levels, right? Expect the market to reject or retrace once in a while before it moves to the upside. Now for last week, of course, it shot to the upside, rejected, and then it came back down, and then it bounced, and then it moved straight to the upside, right? It is very likely, because it has come back down to test these levels, right? It is very likely that it will go up. But if it is to come down, in most cases, it will either clear the liquidity that is here. I see quite some liquidity, if not clear highs over there, right? I see some liquidity over here. If it is to come down, most cases it's gonna clear the liquidity that is here and then bounce to the upside still, or automatically or completely change direction and come straight to the downside. So we also have to be on the lookout with the fundamentals in this case in order to check how the market is anticipated to move. However, based on how gold is moving and has been moving, I'm definitely expecting an upside direction, right? We are only anticipating gold to just keep on moving to the upside, right? Keep on moving to the upside. I see a trend line over there that might also give some direction. I'm just going to draw it because some way, somehow, these trend lines sometimes do actually get to work and give direction, right? Trend lines that actually span through or just actually cross through the market, right? So in most cases, this can also give a rejection over there and cause the market to come back to the downside, right? I'm just saying that as a clue, but be on the lookout for change of character, especially on lower time frames over here. Then you'll be able to get a clue of whether the market is going to be falling or rising. But so far, majorly, directionally, the market is definitely moving to the upside, right, when it comes to gold. So basically, this was by far the shortest analysis that I've actually even ever done, because here, remember, I'm not sharing with you guys analysis, right, on what to do or where to buy or where to sell. I'm sharing the market forecast in terms of direction. It is for you to know where to enter and where to exit. Now, of course, I'm not teaching that in these forex analysis videos. Here I'm only sharing market analysis in order to give you an idea and direction of where the market may actually be expected to go. Now, if definitely you want to learn how to trade, you will definitely have to hit me up directly, right? Of course, all ways that you can use in order to be able to reach out unto me are definitely on the links on the description. So you can hit me up in any way, but whether it's on social media or directly via through WhatsApp. Right, so it's basically that simple. So for me, when I look at analysis for all of these week and for all of these pairs, I'm not seeing really much of a difference. They are all trending to the upside, and they are all offering buys. And as much as they are all offering buys, the anticipation is just simply to look at the market on a day-to-day basis to check on where the market is changing character to, and if it is changing character or breaking structure continuously to the upside, keep on buying. If it changes character to the downside, sell. But because the overall direction is to the upside, right, don't anticipate too much selling, but also be very careful, because the more the market has moved high a lot, whenever it falls, it's going to fall very hard. So because the market has been rising consistently, the day it falls, expect huge, massive losses, right? It can move approximately 5,000 to 10,000 or above that worth of pips in one particular day, right? And then bounce back maybe in a week or two. So this is basically all I can basically share on this analysis. And as far as I have analyzed and as far as I have seen, I'm not really expecting much except keeping on buying, right? So yeah, that's what we're going to be keeping on doing for all of this week, and until the market shows us anything different. Right, that's it for today, guys. Thank you very much for tuning in. Thank you very much for watching up until this time, right? And if by any means you have watched until this point, I want you to comment another pair or instrument in the market that you are trading. I will definitely analyze that pair with you, especially next week. Right, thank you very much for watching. Thank you so much for your time. I'm grateful. Don't forget, right, to subscribe and also hit the notification bell so that you're notified next week whenever I drop a new analysis video. Until next time.